What's going on? This is the midweek review for Day Traders versus for the week of November 12th, 2025. Um, what's going on, y'all? How y'all week been? How
All,
y'all?
yeah, all good. Mm, I'm not trading. I did some on Monday, but
Mm-hmm.
this week I'm on off. I'm just watching my chart only.
Oh, okay.
hmm
How
Yeah,
about you?
same for me. I ain't trade this week. Uh,
So far? No trades, nobody?
nope, not for me.
Right, that's all right. It was kind of interesting week. Interesting week. I'm gonna start off with the news because I don't know if y'all saw I had posted this post on IG, but as of what we say, 3:15 today, this is what the news slate looked like today. This was at 3:15, so you can see I ain't making this up, but uh, this was Tuesday. We had bank holiday, nothing on Monday, but then on Thursday, this is what we were supposed to get for the news um, on Thursday and Thursday and Friday. So on Thursday and Friday, this is the data we were supposed to get. Supposed to get PPI, CPI, and those were definitely going to be our factors. Um, our trading setups off of that. But White House decided that we will not be getting that data. After sending out a message on the government website. You can see the data. If we refresh, it is no longer listed as being available for this week. And they even made note that we may not be getting that information anymore. You can see now, the data we have for Thursday and Friday, that is now gone. All that data from to the Thursday and Friday slate that we had that was right here is all gone. And now we won't have that information. The we also still don't aren't getting a lot of the data because of the government shutdown. So this will add to the uncertainty, which I believe we've been trading in a lot of very, very uncertain conditions. There's been a lot of random volatility that you haven't expected. The charts have been definitely during New York time frame. They've been really, really choppy. Um, a lot of guesswork has been going on. You'll see your setup. It'll play out, but then like immediately you don't get any follow through. It'll stall out. You're just gonna see swings where you see liquidity getting taken from both sides, and then the market just stall out, and then just at a random time throughout the day, you'll see the market kind of move, right? And then a couple of other things that it will do as well. This hinders the decisions that the Fed can make, right? This is data that the feds actually need in order to determine whether or not they raise or lower the interest rate. So, this may, you know, kind of drive their decisions as well, right? Because they rely on the CPI data, they rely on the jobs data, and we haven't been getting those. I don't know for sure whether or not they're going to get those in the background some kind of way, but as far as them being released to us and released to the public, it's not available. And so of course, when things like this happen, you know, there's less conviction for them to actually raise or lower the interest rate. So you know, where we could see an interest rate cut, we may not, or where we definitely know that based off of the data, we could see cuts, you know. So I'm curious to see like how that leads us to further determine like where they see the market going, right? So that's the Feds. Then the other thing we could see is reduction in liquidity and confidence in the market, right? Where again, you know, we can see that, you know, we don't have as many big swings as far as the direction of the market goes because the market is still trying to see which way to go. We do have some positive news, you know, with the fact that they the Democrats did go ahead and agree to open the government back up, but that still has to go through the House, right? It's already gone through the Senate, still got to go through the House. So that's why we haven't got the okay, right? And they're actually supposed to be voting on this today. It was supposed to be around 2 that they were going to vote. You can see on right here on this um over here in this news feed that it could be as around 7 p.m. But even with that being said, things don't automatically shake right back into norm, right? There may be some things that kind of still linger on um, because of that shutdown, you know, and that's for the economy, that's for the job market, that's for people who are like furloughed as well. So we can still see a lot of different things still pending, right? And then, you know, because we had so much uncertainty, it could actually shift the actual sentiment of the market, right? You know, because of all of the uncertainty, we can start seeing people move into more safe haven categories like gold, like your silver, and in this case, even going into like your crypto markets, you know, they're not safe, but they you can kind of gauge how they move, you know, or you can start seeing people move into bonds and stuff like that. So that's kind of where we will have to kind of pay attention. As of the latest on the Fed Watch tool, this is CME data from the CME group. Again, the Fed Watch tool. This we what we use to kind of get a prediction of what they may do on the interest rate. Normally, we can get a pretty confident idea of where they're going to swing the market, but you can see even on the tool, like this is the first time I've seen a very balance, pretty much um, grasp of where the rate will go to. 60% say we get another 0.25 basis cut on the rate, right? Which means that our current rate is 4.0 and they 60% say we'll get another basis cut, which will bring it down to 3.75, right? But again, usually we have a pretty definitive um rate probability. Right now it's about 60/40, which is again, this is the most balance I've seen in a while. Where we have about a 40% chance of them leaving the race the same. Um, Powell is typically um, typically inclined to kind of base his decisions off of what the market has given him, and because we haven't been given the data, I don't know if they get the data outside of what we get, so this may pause him to make another cut, you know, because he won't be able to get the numbers that he needs to make the decision. So this is just giving you guys like a heads up. Like a lot of this market is moving, a lot of the way the market is moving is if you're not on the higher time frames, higher time frames, and you can use a big, huge stop loss, it's kind of almost take what you get out, and move on with your day. Okay. So the markets ended up higher in some cases like on Dow, the market ended up higher today, but on S&P and on NASDAQ, we didn't end up higher. We actually traded a little janky today. So you can see the Dow was kind of just up for the most part, except for his bigger names. Nvidia was pretty flat. You can see NASDAQ was pretty much down, but the pretty much up for the most part. But you had your bigger names weighing the market down. Then you can see S&P pretty much similar. Like it's green across, but the bigger names are the ones that weighed the market down today. And we had a push up initially on ES and NQ, but then we sold off in the afternoon and we kind of ended up right where we opened for the most part. So and you can see we kind of ended up flat on today with this big doji we printed today on ES and on NQ. But comparatively, you can see on on Dow, we had a nice big bullish candle. So again, thanks Trees for correcting me. I've been saying the same thing. I've been saying the right thing, but using the wrong word. There's no symmetry in the market right now between these three. But we do have divergence, where we're seeing one do one thing, the other doing another thing. I've been saying that backwards for like weeks, probably months now, but y'all know my heart. But we'll go ahead into the setup chart. So this was me looking for a trade today that I didn't get. Yesterday I was looking for a drop down into this order block, which is inside of this old new week gap and inside of this 4-hour or 1-hour fair value gap right here. We've already traded through it, so I'm expecting us to use it to go higher if we stay high. If we do sell off, I'm looking for us to come below this, but we'll update the charts today. It's still kind of at the same price range right now. We haven't really moved a lot, so I'm still looking for pretty much the same setup. So what I'm looking for in here on, and I'm starting this in a different order today, just because I was already talking about it, but it's pretty much the same setup. Let me bring this over. Pretty much the same setup. And let me take all this stuff off of here. So this is the fair value gap that got inverted. This is an order block that we need to pay attention to. This whole move to the downside is one order block right here. And then we pushed above this with this move right here, right? So, and you can see it even better on the 4-hour right here. There's the order block right there. And this is the order block that's important. In most cases, the setups that we look for, we need to see that we have liquidity that's been swept. So when we looking for our setups, there needs to be liquidity that's been swept. There can be order blocks anywhere we want. There can be order blocks all over the chart, right? This is an order block. This is an order block right here. All of those are order blocks. But the one we want is the one that sweeps liquidity like this one did. This one sweeps liquidity. The order block is where we really want to focus on is the body of the order block. And then the order blocks we really like is the ones that has a fair value gap that we supposed to be selling from if we were going to keep going down, but it gets traded through and it creates another order block to the upside. right here. And the most sensitive areas is where we get the overlap, right? And that's really the main setup that I like to see a trade come from, right? Because just like this is similar to what we're going to be looking for right here. So in this 4-hour candle, there is a 1-hour order block, fair value gap, right? There's a 1-hour fair value gap. We swept liquidity here. We swept liquidity here. We also know inside of this move on the 4-hour, there is an inverted fair value gap. And then this is I took this whole body from here, here, and here and combined these 3 candles. But this is going to be the fair value gap that we look for price to come back to on a higher time frame if we get a move all the way back down here to see if we bounce off of this. We also got this new week gap opening that we can see price coming to. And then we have this inverted fair value gap that we can see price come back down into and move away from. So that's kind of the justification for the setups, right? And then we have this gap right here from last week that we've already traded through. We've used it, we've traded through it and came back up and used it again. But this is all overlapping, right? A lot of what I like to see is replacement, right? I want to see that something replaces this area, right? We have a fair value gap here that took liquidity. It used it to go down further. We came back inside, we traced it. This gap has been filled, but there's something that replaced it there, right? So when we go back and put everything back on the chart, I can take this off, but I still know that the reason why we getting this move up here where we are right now is because this gap got replaced over here with this move right here. They replaced it with this move. And we are responding to what happened over here in this area, right? And all of this, every time you see that there's some point of interest, you want to see that if I'm going to use it, there should have been one that replaced it, right? There's a inverted fair value gap. This got replaced by a fair value gap. This got traded into. We took out the liquidity. We replaced this area with the order block, and then we replace that with a new fair value gap that we need to look out for. So this is the one that I was referring to. I'm putting it on a 1-hour just because I just like it on a 1-hour better. There's no preference. There's no reason why you couldn't put it on the 4-hour because they crossing over the same area. But I just like the better build of it on the 1-hour, right? This is that for value gap. This is now inverted, meaning we have traded through this. This was supposed to sell off right here. And because it was supposed to sell off right here and it didn't, this where it was supposed to be bearish, right? We were supposed to sell off inside of this range somewhere and we didn't. So now we're going to be using this to buy. Just like you can see, we had this nice buy off of here. And if we come deeper into this, we can see a buy as well. So that's where I'm looking for a deeper run into this. And I'm actually looking at, midway point. Since we already bounced off the high. So I would like to see us go midway point or the low and hold up. And if we don't do those, then we come into this this 1-hour fair value gap right here. And of course, we just saw that Dow made a new all-time high. So what's likely to happen on NQ and S&P? We likely to get an all-time high as well from those as well. Usually if we stay in symmetry, that's what we can expect from S&P and Dow, right? They typically gonna do the same thing that the other one does, right? So that's what our downside targets are, and that's where we can see a bounce off of these downside targets, right? So for the upside move, right? This is our previous day high. This is actually our weekly high now for the upside targets. This high right here. This is now our current weekly high. I like having this music on in the background. All right. This is our previous day low here and here, right? So we got liquidity building up from the bottom half, which we would love to see them take all of these lows out, or at least take some of the lows out, and then move up higher off of this. But if not, you can see we got targets here, here, and here. And you can see we got liquidity over here. We got a swing high here, a swing high here, and a bunch of and another swing high here. So we have upside targets. So if we don't come down to take any of this liquidity, you can see us create a fair value gap through these highs, or we can see something like this where we get a low liquidity with no real volume, a lot here, and we just start climbing up overnight. And then we get like one move where we get a fair value gap that takes us through a high. So this is a great example right here. So we had liquidity right here in the form of old highs, right? And in order for us to take these highs, we had volume, low volume, low volume, low volume. We had a order block, and then we had a fair value gap. And that fair value gap, the move that created this fair value gap, is the one that took out these highs. And then after it took out the highs, this move to the downside just traded back into the fair value gap, and then it moved even higher. And then it repeated the cycle, right? After it took these highs, it made this high. We got slow move to the downside into a fair value gap, then another fair value gap created right here. We took out these highs, then we had another high made, traded down into the gap, and now that's where we need to be looking for. So this repeating itself as we keep going higher and higher. So that's what this blue move to the upside represents us pushing higher, creating a fair value gap, returning to that, and then continuing higher until we reach that 690, 6990 area or 7,000 target. Okay.
Hey Corey, I got a question. For that fair value gap you have located at the bottom, how come you only have it from right there to right there versus all the way up to where the inverted fair value gap is? Yeah.
Right here. Just
Yeah.
preference. Just a preference.
So
This
can you do that though? Because I was wondering if I'm doing that wrong.
you can, because this whole move is still the same move up right here. But the only reason why I put a break here is because we had this candle right here. This one candle right here.
Oh.
And if you look on the lower time frame, this is actually an order block right here. So to me, that's a break in the actual movement of the orders. Like when you seeing these,
Okay.
really what the fair value gap represents is one directional trading, right? And one directional trading, it on that particular time frame says that there's no opposite orders being placed in. And then if there is, the number is so low that is not affecting price, right? So when I'm seeing something like this, like I got one fair value gap right here, this little one, another one right here, and then I got this break in the price right here. So this is where we actually saw some new selling come in right here. But if you look on the 4 hour, you don't see it, right? So that's why I said you could draw it on the 4 hour too. You could still draw it on the 4 hour, but in the 4 hour actually is a better picture because you got your inverted fair value gap right here, and you would be looking like this, pretty much like this, where you would keep the whole gap from the new week opening gap. You would have your low to here and your high here, and then you just know your sensitive area is right here, where you got this, and you can see you still get the same thing. You still get the same trade.
Oh, that is true.
You
Yeah,
still get the exact same trade, just from a different perspective, right?
yeah.
Since you asked, I'm gonna leave it right there too, because that was a good question. I'm gonna leave it on right here, because it's still the same thing, right? You get this this is actually, and I'll give it to you as well, because this is actually it's a better picture, because of the fact that we can actually see that this is the inverted fair value gap that we need to be referencing. This is our sensitive area right here.
That was
You
great.
don't you
Thanks.
don't get it on the 1 hour, even though it's on the 4 hour. Is there on the 4 hour, but you don't see the same inversion right here on the 1 hour. So we'll change that. I just didn't want to have all this overlap right here, where
Well,
you see all this.
I've been doing that, and that's why I was wondering if I'm doing it wrong sometimes.
Nah.
And it's messing up my trading.
Mm-hmm. Yeah, I didn't want to have a lot of the over. What I would recommend is use the highest time frame anyway. But for me, I just know, hey, there's an overlap here and there's an overlap down here. There's real sensitive areas in between this low, I mean the midway point of this inverted fair value gap and the low of this inverted fair value gap, because we got all of these overlap right here with the new week opening gap. And then below that, we got overlap down here between this 4 hour inverted fair value gap and then our 4 hour that we already accounted for, with this move right here. And this actually needs to be bullish. So, but you still get the same setup though. You know what I mean? The setup is essentially looking like this, right? We had this move from this low. We took out some liquidity. We started making small runs higher, building up liquidity. Now, either we come down and sweep this liquidity and then start to move up higher to take out this high. Like this is kind of what I'm expecting, right? We sweep some of this liquidity, we'll run to the downside, and then we trade higher. Or the other thing is we've been making small runs higher, and we just make a bigger run higher and leave this liquidity for later on, and then like push up a little higher to go ahead and get that 7,000 or 6990 area. So either we sweep this liquidity or we leave this liquidity right here and we get a bigger run higher, which this is actually probably the higher probability, because if we get that government open, it's going to make the market run. So then we'll probably get a really big trade through the highs, and then we'll probably stall out later on this week, Monday or Friday, or maybe tomorrow, Friday, late in the evening, or then we'll have some stalling going into Monday, and then we'll get a retracement. But that would probably leave these lows alone, and we just run up. For positioning, this would be the better move. If there are some longer term players, some bigger term players, bigger name players, for position sizing, for them to get their last minute good trades in, this would be what you would want to see. But if they may not have to do it, right? They may have got in over here on Friday, right? And they may leave this alone, but we got to set up for both ideas. Okay.
Thanks, Corey.
No problem.
That was very helpful.
No problem at all. And I'm gonna drop this in the chat. I'm not gonna go into the same amount of detail on this one on NQ and stuff, but because it's pretty much the same on NQ. NQ is actually almost verbatim. You're gonna see same stuff. You're gonna see the same stuff that you're seeing on ES as well. So we just gonna change a couple things, and you're really gonna see the exact same thing. Remember, we just had those highs. That's the 4-hour fair value gap. That's the 1-hour fair value gap. That's the fair value gap that's higher. Then these are the liquidity that we had on the high side, right? I'm gonna give you the same look, right? We had the same, it almost looked exactly the same. The only difference is we're holding inside of this fair value gap on NQ, and we haven't taken out these highs. So these highs are our first target. We got equal highs right here. That's a good target. Then we have this high, that these two equal highs again, great targets. Then we got all-time high right here. So, and you can see we got this gap, same gap that we had. It got replaced. We took liquidity here. We took liquidity here. We even took liquidity over here. This is our order block, this whole downside move. Just like we had on the on ES. We got a order block to the downside that was supposed to sell us lower, and it didn't, and we inverted it. Order block right at the weekly opening, a gap, and then we have the 4-hour fair value gap. I appreciate Treese to this week. Treese, you've been on it this week, so I'm gonna update the chart for you because I had my setup based off of the 1 hour. Treese has been on it this week. That means she been learning. So Treese gets some kudos.
I'm just trying to be like you and Anna.
I'm looking for another mini me because you and Anna, y'all don't let me miss up a lot, man. Y'all do not let me miss, and I appreciate it.
Just trying to learn from you.
Hey,
Just trying to be behind you.
that mean that let me know I'm doing some good because y'all be on me and I'm good. I'm glad that mean y'all paying attention. Like, and some of these trades, I know y'all seeing the same thing I'm seeing. So that's a plus. So we got our gap. And we just gonna go We got you can see we got our fair value gap too. I'm gonna leave the fair value gap from the 1 hour, but again, same way as before. We just gonna make a couple of adjustments. Looking for the same thing. I'm gonna go back to the 1 hour. We got our previous week low. We pretty much left this previous week low alone, right? We not even at risk of taking out the previous week low. So that's why I'm still bullish, right? This was the close from yesterday. And if we come down, we could hold inside of this inverted. This one hasn't inverted yet, but we could be holding inside of here. If we stay really bullish and we don't need to do nothing but come down into this weekly opening gap, that's a possibility. But because it's running so close to this 4 hour area, I really would like to see it come down into here. I'm not gonna draw this one all the way, so it won't overlap. But again, same look, right? I don't want this to come that low, so I'm not gonna pull it all the way down. Previous day high, that's our upside target right here. It's really equal highs right there. Then we got these equal highs as targets over here, right above. They pretty much all three of these highs are right together. That's our main target. We got a 4 hour fair value gap right here, right above, but until we get to that, I'm not gonna really I take that back. Let me pull that one out, because that's too close. We already tapped it once. But for now, main target for this week are these highs for sure. Those are some bullseye targets right there. And then once we take those targets, we definitely come to the middle of this fair value gap on the 4 hour and maybe even the monthly. So let's make the target this 26,000 area. Same thing as before. We could start seeing price just run up. And just like before, there's a reason for us to grab some new area, right? We want to see high created retracement to something. It's an order block. Then we want to see fair value gap through the highs, right? This little one right here got used partially. The order blocks got used more, but we took out the high eventually. And now we got a fair value gap to the downside. If we're gonna go higher, we need to invert this area. I won't draw it, but you guys know it's one right here. And then if we take this high out, this fair value gap right here, move. This one right here, once we get above this, we got this other one we need to deal with. And then we need to start seeing price hold at 25,800 area. We'll see a high getting taken out. We'll need to see price hold around 25,800 area. And then we need to see a trade through these highs, and a whole price needs to hold at 25,936 to keep going higher. And then we can start looking at these previous day equal highs. And then we can look at making a new all-time high.
And this kind of setup happened on NQ. this was like rare, right? All 3 days, Monday, Tuesday, Wednesday, came back at 10 o'clock, same place, right?
Not it's not rare, but I mean it is equal lows. Like
Mm-hmm.
that's it's not rare because it does happen, but it's just like for it to just be winding up this, tight
Mm-hmm.
is really not something that you would expect,
Yeah, means all like Monday, Tuesday, Wednesday, every day means yeah, it happens, but I have never seen like means after 1 week or 2 week it always comes there,
Yeah.
but like every day we get. I was trying to get same setup.
And it was just like you'll get the setup, sweep
Mhm.
you out, and then it'll just go right back to the move.
Exactly.
And you can see we got equal highs. That mean we got liquidity on both sides.
Mm-hmm.
And again, you really want to see, like I just said before, in a case like this,
Mm-hmm.
the move is usually you want to see this. Hold on. Let me just pull this up. Same situation. It just look a little different, right? This
Yeah.
move look like this. And right now, this is where we at over here.
Mm-hmm.
And because we got this liquidity on both sides, we got liquidity over here and we got it over here, right?
Mm-hmm.
And then we already know over here somewhere, we got some highs above this, right?
Yeah.
We got a high above all of this, right?
Mm-hmm.
And the question is, do we want to take this liquidity before we go?
Mm-hmm.
We want to leave it, right? Because the we can either do something like sweep this,
Grab and go. Yeah.
grab it, and then go,
Yeah.
and
Mm-hmm.
then come back in here and go higher.
Mm-hmm.
That's what you want to see in a normal market condition, right? And then
Yeah.
you can start looking for, we should have fair value gap over here somewhere that we just traded into
Mm-hmm.
on the upside, right? We should have some kind of fair value gap over here. And that's where we should get our move from over here.
Yeah.
Up in a top line, A plus setup is this right here.
Mm-hmm.
We get our setup and then we start looking for buys somewhere inside of here. We put our stop loss down here, and then we start trying to at least get this high or which should line up with this area over here. And then the next place would be where do we got a high above that? The high above that should line up right here. And then if we got another high, the other high should line up above that. That's if you could write it up just like this every time, this is what we would look for.
Mm-hmm. Yeah.
But the other thing is we can see us not take these lows,
Yeah. Which is happening
which
mostly.
has been happening, right?
Yeah. Yeah.
That's been what's happening, right? We
Mm-hmm.
don't take the low, but we do take the liquidity from this high, these highs that we got right here, and then
Mm-hmm.
come over here and take out this liquidity. But
Exactly.
when we run through this high, these highs right here, and this high, we still should see a big move to push us through. And that should be our next leg up.
Yeah.
That should be our next leg up. So instead of us getting this very, very discounted price, we got to come up here to get our sale. So like this would be the equivalent of taking a 50% off sale right here. This is a 15 to 20% off up here. So if you think about it from, Black Friday, this is a Black Friday deal. This is a Labor Day deal. You know,
Yeah.
you know what I mean?
Mm-hmm.
But you still want to see like something form around this high. And instead of it'll look like this instead where you get fair value gap. here, and then your setup is instead looking like this, where you want to see price come down to the midpoint or to the low, and then initially your setup looked like this, where you got a big stop loss. But once you start seeing price hold, you can look for initial stop loss here, then your stop loss goes here, where you just wait for confirmation. But we will wait for confirmation before we went in with that big of a stop loss.
Okay, Corey, I got a question right quick.
Yeah.
So after we get the confirmation, where would most likely where would you put your entry point at? Would you wait for the price to close or open like right above the previous closing?
Typically, that's why I look for the overlap, because this move right here should have a order block in it right here. And if there is an order block, there should be a fair value gap inside of that order block that we should invert. And if I'm looking at it right now, we already got the makings of this particular setup right here. If I'm looking at this correctly, right? We have this inverted. This is not inverted yet. And let me make sure I state that. This is not inverted yet. There is an order block already potentially forming right here, where we have a short-term low that got taken out right here that created an area. It created the fair value gap, which is right here. Right now, this is still bearish. This is still bearish, right? But if we trade above this, now this is game on, right? We should get a fair value gap to the upside through this. And then if we do, the overlap is where you want to see the highest probability for us to get our trades set up from, the overlap. And then that's the most sensitive area. The great example of this is this last move up right here. This was about to sell off. We took liquidity here. We took liquidity here. This whole move is a order block. On the 4 hour, we had our inversion. We were supposed to sell off right here. And when I mean sell off, that means once we see price rejecting right here, we should take this low to keep going down lower. Because we did not see that, we had price trade back up through that. We had a fair value gap right here, and there's even one on the higher time frame that's right here. And now we can start looking for this to go higher, right? And the next time we come into this area over here, you should expect for price to bounce. It traded down to this area right here and right here, but it didn't bounce. And that's okay, because that means this move got violated, and sometimes that happens. But instead of it using this area, we still came down into pretty much this same area over here. And if I go to the 4 hour, there's a fair value gap right here on the Friday the 17th. That's the move down. This use the order blocks, but either it might be on the daily. Must be on the daily. Yep. It's on a different time frame. Let's see. It's the 1 hour. There's an order block, fair value gap. And this still lines up with that, right? Order block, fair value gap area. We tap right off of the high. of this fair value gap right here. And we pretty much tapped it and then ran off of it. And that sometimes it don't work, but it's a high probability that it is gonna work, right? So now going into this, we really need to watch this area right here and how we trade through this. And if we don't sell off, if we don't start taking these lows out and we trade above this red box, that means that this getting violated. It's getting violated and now is neutral. And if we don't see this used as a sell, this is our next area to buy. And then you just need to look for your fair value gap. And then inside of the fair value gap to the upside, you looking for that upside fair value gap. When you get the upside fair value gap, you're going to find where you see the two overlap each other. That's the area of highest probability that price is going to come back down to. And you'll see this is the leg that we're looking at right here. Right? This is what I would be looking for, right? This leg. So if we have liquidity, that's our liquidity, right? We got one low, two low, three low. One low, two low, three low. We have two highs. Let me undo that. We got two relevant highs, right? That's these two. One, two. That's that little short high right there, right? And we have a area that's supposed to sell off, right? And if we don't get the sell off, right, then we can start coming in and looking for price to give us a fair value gap to the upside like we got right, like we've drawn up right here. And then this, at this point, when we get the fair value gap, right, this becomes no longer sell area, right? This fair value gap that was one to the downside is now neutral, right? And then we can start coming in here and say, okay, where do the bullish fair value gap and the inverted fair value gap overlap, right? In this case, in this scenario that I'm drawing up, is the middle to the low, right? So you can start looking for your setup middle to low, but the actual overlap is down at the low. Your stop loss is then either initially this low or below the inverted fair value gap. And then you can look for trades all the way inside of this area or right here. Those will be my main areas. Now, does it have to come down there? No. So once you get here, if you see that you get some confirmation that is ready to go from here or even here, you look for the confirmation, you take the trade from one of these levels. But I'm going to be looking for mostly at this particular area because that's where the overlap is. Given if we got like a lot of movement because of the government open up, we may not get a return all the way down here because that's a momentum trade at that point. The momentum is driving the trade. Got it?
Yeah, sounds good.
Okay. So we already kind of getting that second setup right now. So I'm gonna be watching that actually because this is leaving us some signs like it want to go up from there. So let me go ahead and send this one. It's nice. Going into a lot of details today, but I hope y'all appreciate that.
Yeah, it's necessary because it's a lot of it's so much uncertainty out there. We need the details. I need the details. I can speak for myself.
It definitely is, man. This couple weeks has I mean, really this whole summer has been summer into fall has been like a really you got to be a lot more patient. Like this has been definitely a test of patience, right? All right. This is Dow. Okay. Dow has already done the move that we just mentioned on ES and Q, which is why I'm expecting for something similar to the second setup. Right now, this is inverted. Right. Setup.
Let me ask you one question. So when you say inverted fair value gap, just give me a quick rundown of exactly what that means.
That means that initially, so here's our fair value gap. The lower this candle, engulfing candle, the higher this candle. That's the fair value gap, right? So 3 candle setup. It could be more because you could have like 2 fair value gaps stacked, right? But in this case, we just got the lower this candle, the engulfing candle, the higher this candle, right? Typically, this area is a very sensitive area because we took a low. That means we changed the direction of the market. We were going up, but this is a sign that the momentum of the market has changed. So we were going up. This is a sign that this is going down, right? And so the next time we come into this area, whether we come to the low, middle, or the high, and sometimes in the middle of the high or the middle of the low, price should react to that by continuing into whatever direction you get the fair value gap in, right? So we had price shoot all the way down. We made a low. Once we make this low, if we come back into this area, we could typically look for a new setup to continue to the downside like we got, right? I'm referring to this. These lows right here got taken out by this fair value gap. We made a high. We came up in here. We sold off. This high is the new target. We took that high out. Took that low out. And then we made another low. Right? That's what I mean. This setup right here, where we have lows, we have a short-term high. We trade through those. We make a new low. We come back into the same area where we got the fair value gap. And then we sell off again. So in the upside, we looking for the exact same thing, right? So when I say inverted fair value gap, it is a fair value gap that we were supposed to be selling from, right? Like we did right here. And the next time we get into it, instead of us selling, we just trade through it. And now that we traded through it, the area is still very, very volatile, right? There still could be a move off of the area, but it was replaced by a move that's stronger to the upside, right? And you can see even this one this is old. We don't need this one, but we took out the monthly high. We took out that little fair value gap, took out this fair value gap, and now this is a good example of what we were just talking about, right? So I'm gonna just put both of these together. This area right here is the new bullish fair value gap. It's 4 hour. The overlap happens right here, where you have this one that was inverted, and then you have the new one to the upside. Where you got the overlap is mainly between the middle of the new fair value gap and the old and the low of the new fair value gap. So let me move some of this stuff off the way. Just move this out the way real quick. Okay. So these highs, like I said, we need to see a fair value gap through those highs. Not only did we take these highs, they gone. We don't need to worry about that no more. But it also took these highs right here too. They gone. We don't need to worry about that no more. They took all these highs. We even made, and we even took the old all-time high that we had right here. And now we just made a new all-time high. We got two fair value gaps, right? When, just like I said before, whenever we take highs, we need to see either slow run liquidity through the highs, or we need to see a huge fair value gap through the highs. We took a huge fair value gap through these highs, and then we took a huge fair value gap through these highs. So for the short term, we could see price just come down here into this one. If we get a bigger run to the downside, then we come down into here, where we have the high probability of coming into the overlap down here. So that's probably what we're gonna be looking for on Dow Jones. So this was yesterday's close right here. And either we bounce somewhere off inside here, or we push down inside of the I'm gonna just give it some room. Or we push down inside of this and we start dealing with the overlap. And we reject off of here. And right now, your main target will be the new all-time high, where we take out the new all-time high again that we just made. Previous all-time high. This is our new all-time high. And then right above our new all-time high, we got a huge number at 49,000 right above us. We just hit 48,000, but I think that if we get above this, 49,000 will be our probable run, where we can see price push up to here. And just like before, we will want to see gap through, push up, trade down, and then we go ahead and go to that 49,000 price. Because at this point, you got to assume that we trying to go ahead and get that 50K point. which is not that far off. 50,000 from our last high. That is only about 3%. Just around 3%. Like we can do 3% in a week, in a day. You know, in 3 days we can do 3%. So we should be expecting to hit 50K. You know, if not this quarter or this week or this, if we get the government open, we probably gonna go on and hit 50K. I would go ahead and say that that's a probable move, you know, or we get it within the fourth quarter that we hit 50K. So we can forget about this move for now. So this is pretty much all I'm gonna be looking for on this play. We don't need to worry about none of this stuff down here for now. This stuff is irrelevant for now. We got to deal with what we dealing with for the current move before we even think about what happens at this fair value gap or this fair value gap and this previous week low. Because now we just took out previous week high and we took out a couple of those. So this is pretty much all I want, all I'm looking for on Dow Jones. Well, another thing I'll recommend, like just be patient with the moves. If you don't get the first move, or you don't get the best entry, just if you don't get the best entry on the move, on the setup, instead of looking for the best entry, just make sure you're seeing the charts the right way, because then you can kind of get in however you can get in. You don't necessarily have to have the perfect entry. You can just, all right, if I see that it just reacted from a fair value gap and it's already moving towards the high, maybe I might have to get in a little higher than I want, but that means I'll have to just shorten my target. So gold pretty much pushing up. The setup that I was going to give y'all on Monday for Sunday is already played out. We pretty much already have taken out these highs that were right here. And then the other move was for us to push up above this into this 4-hour fair value gap. And then we have a price gap that's in between there. And we pretty much paused up here inside of this range. So I just kind of want to see us how we react to this area. It looks like we will have to deal with that for the most part for tomorrow and Friday. And looking at the way we close, we have our big fair value gap. Get some of this stuff out the way. $56. Right? This was the close. So $42.50. I'll get rid of that for now. You can already see what do we have. We took out highs. Now, see, this might be a little different because gold moving based off a dollar. We already got this fair value gap right here on the daily. We never traded back into it. And then we got a gap right here. We didn't trade into this. So now when we go to the lower time frame, you can already see where and why I got my setups. So the first thing is we're going to deal with this price gap. If we do come down there, before we decide that we're going to keep selling, we need to see how we deal with this price gap, right? Then you can see also, along with that price gap, we got fair value gap that we got to deal with on the 1 hour. And there's an overlap. So it's a lot of overlapping for now, right? So if we do come down into this fair value gap and we don't sweep these lows, we can see that we keep buying from there. The other scenario is we just push up, we take this high, take this high that we got, and I don't really want to look for a lot of a buy here unless we come down, right? I want to see us come down first. If the government opens, that's bad for gold, so we may see a retracement on gold because that may make dollar stronger, right? So dollar might get stronger on the news. So for now, we can just rock with this 42.50 to 43.70, 42.70 area as a target. And then if we come down, we can look for buys at this price point where we have this 4 hour fair value gap. It will be inverted at that point. Worst case scenario, we come down into the for now, we come down into this price gap and then we try to buy from there. That's pretty much what I'm looking for gold. I just want to see first how gold reacts to the market pushing up. And I actually need to look at dollar first. So before I send this, let me look at dollar. Yep, dollar is pretty much ranging, right? This is our current weekly low. And we sitting inside of this big inverted gap on the daily. You can see this is the gap that should have sold off. We tried to right here. We traded through it right here. And now, see, this was the gap. We tried to sell off. Now we trading back down through it. I like to see this reinforce what I've been saying. So now that we traded through it, we got a gap right here on the daily, but there's some bigger ones on the lower time frame that we trying to use right now to keep us hot, keep us up. So if we do reject from here, then we can see these highs start to go for it, and then we will want to see if price is going to want to come into this fair value gap right here to the downside. And then if it does it sell off here, or does it go ahead and take this high out or go get this high right here? If it sells off, then we know we are going to pretty much come back into this fair value gap. Then we need to be looking at this low to see if we take out this low. And then there's an inverted fair value gap right here that if we take out this low, we definitely come back down to it right here. And then there's another fair value gap right here that we could be coming down into. But then if we come down into this, the probability of us taking this out isn't that high because this low would be at risk and then this low down here would be at risk. And we would probably need some very big news to get through this area right here that we already moved up from. So that's like a short description of what we'll be looking for. Okay. This gap is the new week opening gap, and it's pretty much being used. We don't need to really account for that anymore. But you can already see what do we have right here? Order block that swept liquidity. Inside of the order block, we got a fair value gap. Let's take the stuff off the chart. Lows, lows, more lows right here. Highs, strong move to the downside. Price comes back into this. We don't take the low out. We don't sell off inside of this area, but instead we trade above it. Now this is inverted fair value gap. We don't have the bullish fair value gap inside of here on the 4 hour or 1 hour time frame. So there still may be one that we need to get, right? But we know that this area now is one that we need to be looking at. And let's
So, Corey,
uh-huh.
so that order block, that bearish candle that you're talking about. So is this what they mean by doing a liquidity raid or liquidity sweep?
Yep.
They take out what? Help me see. 1, 2,
It took
3,
out
4, 5, 6 lows.
these lows.
Mm-hmm.
It took out these lows.
Mm-hmm.
It took out these lows.
Mm-hmm.
And it left.
And it made a new low.
That's the new low. Right?
Mm-hmm.
And so when you see that, that's exactly what I mean when I say liquidity sweep. That's why an order block like this one isn't important as this one. Because this is an order block too. But there's no liquidity sweep involved, right? So that's why you don't want to pay attention to that one. You want this one because this one take the money. This one takes money. This one takes money. And the ones that take the money is important because that means that when they took all of these lows out, they placed new buy orders on this part up. These were pending orders. They could see the pending orders down here. And instead of they trick people into thinking that the market is going to keep selling, and instead, all the people that tried to sell on this move down, they bought all the orders up. And then that's why they'll probably go after these highs right here. And then this high. And then all of this liquidity right here. And then the next thing we got is this gap right here that we could probably come into.
So with that liquidity sweep, right? The people who did try to sell off, that was not a good move for them, right?
That's not a good move for them. And that's why you see the continued buying. Because every time these people who sold on this move down right here, if they are selling, how do they have to get out?
They got to buy.
They got to buy themselves out. And guess who's buying them? All of these people right here. All of these people who are in the move right here, they faked you out so they could buy your orders. That's pretty much all that happens in the market. This is the repeated cycle over and over. They fake you out to make you think they're gonna buy. And what do they got to do? If you bought up here thinking that it's gonna keep going higher, how do you got to get out?
You got to sell it.
You got to sell out, and they know that. So when they see that you got to get out of your trade, they sell your trade right here, and this is their money on the downside. This whole move right here.
Mhm.
Same thing. They want to get you right here one more time. They knowing that you thinking this a buy area, right? They know that they think you're going to buy right here, right?
Mhm.
Because you didn't seen this wick right here. It's at a monthly price level. It's an order block and some fair value gaps over here that they don't really want to use. But what do? They get you to buy here, knowing that you got to sell to get out, and then they just sell your order right here. Then they get it down to the price level they want it to be at, which is down here somewhere.
After they don't take them lows out.
After they done took the lows out, they do it one last time. They get you to think, all right, we ready to get you to buy all the way here. And then once they get you ready to thinking that it's gonna buy, they run it
Sell
up one last time, sell it off. Now they got it at the price they wanted to get it at, and now they're gonna start running the buy up from here. And they're gonna probably, depending on what, why, when, and how, they probably gonna do this one more time, or two more times, or three more times up here until they get the amount of orders they want, and then they can start going after these highs to take the money that was here, take the money that was here,
Mhm.
take the money that was up here. It's really trading really like it's a psychological game. It's actually more psychological than it is anything else. And once you kind of understand that, then you kind of understand why things are happening, right? Same thing over here. This is the move right here. Lows, strong move down, push it up, fake you out again, buy your orders, push it up, fake you out one more time, push it, strong move down, buy all your orders. Now we go and get this high. Then we fake you out up here, have you thinking it's gonna sell off right here. We fake you out, take your money, we buy up here. So now we just gotta figure out which side we gonna be on. This is the close out, right? If we still need to, if this low isn't ready to be held, right? We need to see if they're gonna hold this low. If they hold this low, right? Which they could, because we in an area that could be held, right? We in a good area.
Yeah, that took out that daily fair value gap, right? That moved to the downside, the one you just put,
This one,
the previous week low.
this one out, yeah. But we took it out, but we still in it though. We still
Okay.
sitting around it, right? We can still use that. So I'm not really like, I didn't really take that off the chart because we still use this. But there's more important things on the chart than that one. So that's why I ain't really get rid of it yet. Because this is pretty much the inside of this inverted fair value gap. So that's why I ain't really too much concerned with this one. Because this will give you the same move if you just know that, let me undo that. If I just add this one level, that's the same move, same area inside of this. And
I see. Yeah.
same area. And this level is the upper quadrant of this level.
That'd be like that 61% or whatever you want to call it.
618, not so much 61%. But
Okay.
even inside of your inverted fair value gaps and fair value gaps, you have the high, middle, and the low that you want to focus on. But you also have a middle, you have a break, a quarter point inside of the in fair value gaps as well in each one of those. So especially when you got these huge ones you got to deal with. Just like the 75. So you're really looking at the 0, the 25, the 50, the 75, and the 1. That's gonna give you the whole move, the whole layout. And there's the 0 to 1 is the high to the low, right?
Yeah.
Then 50% is the middle, but even inside of there, there's a 25%
25,
area and a
75.
75% area. That's why we got that level. So like I could take this daily fair value gap off and just focus on this 75% area right here. Because it runs basically straight through the middle of this daily fair value gap. And it's once you start turning into a nerd like I am, you start noticing these kind of little small little intricacies where you'll know like, hey, I already know that is I'm at a quarter point already because I got this right here inside of there. It had to happen at either a high, middle, or a low of this. Just like this 4-hour fair value gap is pretty much in between here. This quarter point and the low. To be honest, I could take this off. I don't need this no more because I already know where I am in regards to this overall move, right? So that's just some little intricacies like you'll kind of notice. And I'll know like, hey, I need to get a move from around here. That's a high probability area. Or I need to get a move from here. That's a high probability area. Or if we just gonna go up, I know that I should be holding around the high. And then if I'm holding around the high, I know that, hey, I got liquidity above me right here. All of these highs. That's a lot of money sitting right there. And then right above those highs, I got a single high just sitting right there. Previous day high that I know we should be running up if we do get a move to the upside. If we get a move to the upside, that means that dollar goes to the downside. And even that hasn't really been 100% because dollar and gold been doing a little bit of the same thing a little bit, but I think it's back and I think it's back on track. So we'll look for this gap as the main target. We got previous week high. And that's pretty much the main target I would want to see on gold. I mean on dollar. And we just marking up dollar so we know what to do with gold. If we get this move to the downside, that means that we should be looking for that buy setups on gold. If we get this move to the upside, then we should be looking for the sell setups on gold. So let me send you dollar first.
Hey, cuz,
Yep.
could you write in that description goal setup for like inverted dollar or something like that?
Yeah.
Description.
I would be writing all this down. Got lazy. I'm gonna have to figure out a way. What I'll do is the transcript.
Okay.
The transcript of this, when I post the video for this, I'll put the transcript in there as well. And
Okay.
I'll put it in and it'll have all of this in there.
All right. Yeah.
That's my auntie.
Yeah.
Hey, hey, hey. Hey, hey, hey. All right, this gold right here. I do need to stop being lazy because sometimes I be forgetting what I be saying about the charts too. Um, what I'm looking for exactly. I'll know in my head, but you don't need to leave it up to that. I just know what I'm looking for in my head, and that ain't always the best place for it to be.
So for this notes, right, you are adding here. So is there any limitation or you need to remove your previous one or just you can add any, doesn't matter.
Right here.
Yeah, size wise.
I'm not
You are
sure.
not removing your previous one, right?
No, 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 no,
Uh-huh.
no.
Okay.
I don't know if there's a limitation.
Yeah, I mean, so because when I'm doing that again and again, right? Again, I'm doing same thing like chart also. So, but I'm not sure about size or not thing. So that's why I thought I should ask this.
Yeah, I don't know. I don't know. I don't know for sure.
No problem.
Now, all right. So that's all the future setups. Now, I gotta get us straight on this. I'm gonna start with Grab because Grab kicking my behind. So I'm gonna have to take a L on Grab. I'm not even I'm gonna move on from Grab because Grab is done for now. I do want to see a leap play on Grab because I do think they'll eventually be a good call, but right now there's just nothing that's telling me that we'll end up taking out this 624 high or this 662 high. So for me, honestly, on Grab right now, I'm looking at this monthly low as being taken out. Looking at this,
Man, Grab did me dirty.
it did all of us dirty. It did all of us dirty. Because what ended up happening with Grab was Grab reported good earnings and then they recanted, which does happen sometimes. They had to do a revision, and you'll hear it. A recant is called a revision. If you hear them do a revision, that means that basically they told us one thing and then they had to go back and change it, right?
So they lied.
Basically, that's basically what those fools lied. They they did something and they didn't do it. That's when you hear them say revision, that means that they lied. That's all that means. That's the politically correct way of saying they lied. And
So let me ask you about that revision thing.
uh
So is that a way for the company to gain some type of quick revenue or
not
something like that?
so much. It's just that sometimes that does happen when they do a revision, the market could go one direction, and then after the fact later on, after the revision come out, it could switch up the direction. You will see that happen a lot. But this case we just got took out, they just took us out, man. Um that's how I will look at this a little. I will look at this again later. This might be a leap play. I just got to find the right leaps for it. But if you haven't got out of it, I am expecting us to take out this monthly low. I think that these two lows are at risk. And now I'm starting to think that we may go ahead and take out some of this liquidity down in the $4 area. Maybe even come down to take out this yearly or tap this yearly one more time. But if we above it right now, 579 area. If we come back below 540, we definitely gonna probably try to tap this yearly. So I'm gonna send this chart, but I don't have nothing for this one. I already got out of most of my position on Grab today. And yeah, I already got out of most of it. So the area I'm looking for it to come back down to is still holding inside of this weekly fair value gap, this 540 area. If we take out 540, it's definitely a wrap. We definitely coming back down to take some of this liquidity out. I'm gonna call that now. So grab is done. And then another one that's got me in a bad place is Jumia. Jumia, I should have got my money out of that because we were up on that. Jumia is kind of kicking my butt right now too. So I'm gonna go ahead and start with those two. Jumia, and it's not really doing bad. It's just not moving like I thought it would. The earnings they actually come out tonight. So I'm still in it, you know, I'm still in it. It didn't do what I thought it was gonna do, just immediately go. But we do see some rejection on this candle now. After these earnings come out, we don't have the earnings yet. Jumia activist Pleasant Lake takes 9%, 9.7% stake. So somebody's buying right here. This just came out 2 hours ago. Somebody else is buying, right? Jumia Technology rises. Activist Pleasant Lake takes 9.7% stake. U.S. listed shares of Jumia Technology rise 1.6% to $10.30 after the bell. Activist investor, we just said that Jumia earlier reported a 25% jump in revenue of third quarter. So that's a good sign. We already have good revenue reports. Up to the last close, stock had more than doubled in year to date. So this is a good sign. Now we got a clue that we've gained on the revenue. Now we need to look right now. The three things we need to look at when we're looking at our option plays is we need to pay attention to what on, and this is the option plays when we do our earnings plays, right? For our earning plays, the main things we need to look for are there's four things. We need to make sure that we're at a bullish point of interest. We need to make sure that on the earnings release, we get good revenue. We beat on the revenue. We beat on the next thing is we beat on the earnings per share. And then the fourth thing is we get a good guidance. Those are the four things we need to look for.
Now you said guidance. What do you mean by that?
Guidance is basically that they're projecting a growth. They're projecting growth. That means that they're expecting to improve from what they did from the last quarter. So
that's that last sentence that up to last close stock had more than doubled the year to date.
not quite.
Okay.
Let me find somebody with good guidance. This was a bad beat right here, right? Let me see. Um, Let me look for their news. They reported on the third. The third was like a week ago. Okay. Okay. So Grab Holding sees fiscal year of 2025. I'm not even about to try to pronounce that. Higher than, right? So Grab, this headline was corrected to reflect Grab Holdings FY for 2025 adjusted. The headline incorrectly said 49 to 50. Okay, that's not quite it. Okay, so when I say Let's look through this, comb through this news. Okay. The company also raised the lower end of its annual revenue forecast to 3.8 billion from 3.33. Basically, they're implying that they're going to make more money. So when you see those kind of headlines, right? They see that they are you may see that they increase their potential revenue or increase their earning per share. You may see like a new technology get purchased, or they may bring in a big partner or something like that. That's all positive news that you want to kind of look for that helps increase their guidance, right? You may see that new and they may have gotten a new investor, just like we saw over here on Jumia. We saw Jumia Technology rise because this particular group picked up 9.78% stake of the company, right? That's good towards the guidance, right? So that's what I mean by that.
So any positive news as far as revenue or partnership or
Partnership, revenue,
okay.
exactly.
So
Exactly.
like this thing with Tesla keeping on Elon Musk and giving him the $1 trillion, whatever he's trying to look for, that would be a positive news for Tesla, right?
Actually, it would be.
Okay.
Actually, it would be. I didn't even hear that. That's
Yeah, they
good.
said they're supposed to give it to him in 12 tranches, 400 some $1 million per tranche, something like that.
Something like that. Oh yeah, I did hear about that. I think they were giving him 1.5 billion or something like that.
No, trillion.
Trillion. Oh
Yeah.
wow. Wow.
To keep him on. They were looking to get some CEO or executive from Lamborghini to head up Tesla, but I think most of the board decided to go ahead and give Elon Musk what he needed to try to spearhead Tesla into whatever direction they're trying to go into, more than just electric cars. So any kind of news like that a company reporting would be positive guidance.
Yep.
So
Mhm.
negative guidance could drive the market down to like to on the downside, right?
That's absolutely correct. But your guidance is more so when they doing earnings. You
Earnings.
get news outside of guidance and outside of earnings too. That would probably fall more out of just fundamental news
Mm-hmm.
because Tesla's not reporting it. So your guidance is based off of your how you did in the last quarter. You know, your
Yeah.
guidance says that I basically beat my expectations. If it's
Mm-hmm.
positive, I beat my expectations that I put out to the world that this is what I was going to do, and I did it. And now I'm expecting to do even better. In simplest terms, that's basically what your guidance is. I did these numbers. I did 50 million on this day on this quarter. I expect to do 50 million point two the next quarter, or 52 million the next quarter. I did I wrote my earnings per share raised to $10 this quarter, and now I'm expecting to do 12.50 on next by the next earnings report. I'm expecting to do a $2.50 gain on the next quarter.
So to add to that resume, basically.
Base, base. That's essentially what it's doing. That's essentially what it's doing. But
Perfect.
the reason why it's important is because you give your investors an idea of what to expect. So if I'm an investor, I can say, all right, you're a good company now. So if you expecting to do this, I can expect to invest a little more money. So I'm gonna say, all right, cool. If I'm a long-term investor, I can add on to my position that I already have right now, because if you're expecting to do these particular numbers, then I can expect to get this amount of return on that.
Okay. So all of this, Checking the news. That's part of your technical analysis, right?
Fundamental.
Fundamental analysis. All right.
There's fundamental, there's technical. That's a part of my fundamental analysis. My technical analysis is what I'm doing on the charts, looking for where I should buy because I want to know where I am technically first. Then fundamentally, I want to know what I need to look for that'll drive the price.
Okay.
You need your technicals to line up with your fundamentals. That's why it's important for us to see what economic news is going on. And that's why I started off our call like I did, because we don't have our economic news right now.
Okay.
So we don't really know like what's driving the market per se, because we don't have the information we need to say, does the technicals line up with the fundamentals? You can just trade technicals and you can just trade fundamentals, but it leave you with a blind spot.
Okay.
And usually if you just trade in technicals, then you need to just look for your technical targets to be reached. That's
your fair value gaps and your
exactly.
liquidity. Okay.
Exactly. That's where you're looking for your swing high, swing low. That's when you're looking for coming to the fair value gap and all that stuff. Fundamentally, when you got both of those, that's when you can look for your higher time frame targets.
Okay.
Make sense?
Yeah, make perfect sense.
Now, I don't, like I said, I'm gonna be looking for some new setups um on the option. So I'm only gonna give out those couple ones because and then Path. I'm in Path too. Path is just sitting right now. Path still doesn't report to the third, so there's no real update on Path. Path is getting his butt kicked for me right now because I picked up my first positions up here on this day. I am going to probably add on, but I'm not in a rush to add on. I know I told y'all I'm gonna start adding on between 14 and 12. So I'm gonna see how this low hold. If we don't take this low out, I'll just go ahead and buy some more as we get closer to this December the 3rd date. So that's how I'm gonna play that one. And we're in the 12th, the December the 12th, I'm sorry. We're in the December 5th contract on this one. Only adjustments I'm gonna make to this is the glass close. Right here. Still
So,
want to just hold that.
so
And
let me ask you something right quick. I'm reading over here the path notes, right? It
yeah,
says December 5th or December 19th for a strike $20.
that's for the option play. Yeah. So
So
I'm
you
looking at these two contracts.
so you bought it at a lower price and you're expecting it to get to a $20 price, right?
My expectation is this 20. Yeah.
And you bought it where did you buy it at?
I bought it around on this day. I don't remember the price because the strike price I got was either it was somewhere. Let me look at my phone. I can tell you exactly. Path. Bought the December 5th contract. The strike price was the $20 call. So I bought the $20 strike. So okay, I got it right here in my notes. I bought the $20 strike. And the $20 strike at the time, did I put it in the notes? I did not. I don't remember what this 20, I think it was 65 cents. Yeah, it was 65 cents. And then the price actually went up to 85 cents on the strike. I mean on the ask, but then now it's at 50 cents. So I'm down like 20% on that one. But
Oh
that's
yeah, so yeah, I'm confused about that already.
it's
So
I know you options, that's a whole this is a whole nother.
yeah, okay.
Don't worry about this one yet.
All right.
Don't worry about the options yet. Like that, this needs a little more explaining. But mainly
That's what
just
you've been making off your total order, right?
was that
You would have made $20 off your total order, or the
um
price would have went to $20 and you would have won your trade.
I mean I could have pulled out when it was 85 cent and I would have been up
And
20.
you would okay.
I could pull out anytime, but every 1% of the game, that's 100% on the option.
Okay.
That's why I like options more than I like doing just buying stocks. Because you get a bigger gain on your stock. I mean on the option versus the stock. So like the stock is when you buy a stock, you buy a single stock. You buy a single contract. Like so think of a stock as like when I buy one stock at right now is the stock to buy this stock is $14.25. If I buy the
Mhm.
stock, it would cost me $14.25 to own one share of the company.
Okay.
When you buy options contracts, you are buying a contract to own 100 shares of a stock.
Okay.
So if the value goes up 1%, that means that however much you bought a call for, which is how you would purchase this, if you buy a call at one contract, your contract does might be less than $14, right?
Uh-huh.
You can buy 100 shares of something at $50, right?
Okay.
I can own 100 shares. If it goes up that to 100% gain, that means I just made $50 off of it. Off of
Okay. Yeah.
That's moving less than it would take to get $50 off of buying one contract or one share of the company at $14.25.
Hmm.
Right.
Okay.
So if I wanted to buy one share, in order for me to get $50 return, this needs to go. If I bought a share, I need this to go to $60.25, pretty much, for me to get $50 off of this.
And that would be that'd be an unrealistic impulse move, right?
I
Consider
mean, something could make it go that high. Something cool could make it go that high, but that don't happen that often like that. I mean, it does. This just might not be the asset that moves that high.
okay.
There are some companies like penny stocks that can do that kind of stuff, right?
Okay.
But
And penny stocks, it's like small cap, right?
small cap companies, kind of most of those companies end up going bankrupt. But you can get some good moves off of that because that's actually where I started trading in penny stocks.
Yeah, I was looking at that today. As a matter of fact, I was looking at two companies, Leap Technologies and Palatine Technologies. And
Palin,
they
not
yeah,
Palantir, but Palatine.
Palatine, yeah. Um
Peloton.
no, Palatine, Palatin.
Let's look at that. Hold on, let me add this. Let me just drop this chart.
Okay.
Palatine, Palantir.
No, not Palantir. It's Palatine.
Okay.
I was looking in the US market, small cap. And those
Yeah,
were huh?
yeah. Small caps are good to start looking at too. You got what's the name of it again?
A
A
Palatine Ti.
T I.
There go right there. Go back. tap, delete one. Palantir Technologies. Okay, F3. Oh yeah, you can look at it.
This one?
Yeah, that's the one I was looking at.
Um,
Now, the reason why I picked that one is because
this is this not a penny stock though.
well, I was looking at it on small cap, whatever that one was.
Okay.
Yeah, that's it because I remember looking at the chart in a lower time frame
Mhm.
or earlier dates and looking at that where it gapped up at right here on what's that May? What's that?
Exactly. Like, yeah, this is a good example of like this is one that like, hey, if we would have been in this buying it at 16 cent, we could have stacked up like and like this is a good this I'm glad you brought this up because sometimes penny stocks because at the time this in May was a penny stock.
Mm-hmm.
The you can see it gapped up to $2 and it ain't came back down there. And then matter of fact, it went all the way up to $19. Now this is the one where, bro, like this is would have been a great catch. And it moved up for no real reason, right? This
Yeah.
actually bad news. It's got no estimates for earnings. This must have been a meme stock. Yeah. What is this? This is a healthcare company. And this might have had some kind of news that okay, then they did a split right here. Still no earnings. Yeah, this is one that this was probably like a pump and dump where right before they sold the company or right before they did that split, they wanted to get their stock price up. So something probably came out to drive the price up really, really big so they could do something like split it or sell it.
Okay. Cut their losses.
Not so much cut their losses, but this is just try to get more money.
Okay.
So when they do a split, they did a 50-1, right?
Mm-hmm.
They did a 50-1. So however many shares you had at the time when they did the split, they gave you 50 shares for that at a lower price,
Mm.
right?
Mm-hmm.
And maybe you had 1,000 down here, right? That
Now you got
had a
50,000.
thousand here, right? Now you basically got 50,000 over here, but it's not valued the same anymore. So they divided your 1,000 shares by 50 and gave you the remainder back at the $5 price. So
Oh.
it's a way that they can get some of the money back that you guys have made off of it pretty much. And
Mm.
now they can go back and say, hey, my stock it was worth 1 cent, or whatever the case is down here.
Mm.
Now it's worth $5 a share. Now I can go to the bank and say, hey, my stock isn't worth 9 cents anymore. It's worth $5 now. And I want to take a loan out so that I can borrow some money, right?
Mm-hmm.
Against what my current price is now. So that way I can do more towards making money. That's usually what they doing it for.
Okay. And it's something similar like that with Leap. Leap still below $1.
Leap.
Yeah. Leap Bio. It's another bio pharmaceutical company.
First one.
No. Leap Therapeutics.
Okay, cuz you've been doing your hard work, huh?
Hey, I'm trying to get it, man. I'm
Okay,
trying to get it. I'm trying to get it.
okay. Yeah, man, we should have looked at this one. This one is on the move too. This already came out with some new and see. So when you start getting into stuff like this you need to know with there's certain things you need to do for certain kind of stocks, right? This is a health company, right? Biotech. So 9 times out of 10, they got something in trial. That's that's when you're looking at and see, let's see, leaps,
And that's what I was thinking. They're probably coming out with some new
some new medicine, some
new medicine or some kind of biotech, something like that.
exactly. When you're looking at these kind of plays, you need to know what kind of technology or what kind of new thing that they're about to be looking at, because that's usually what is driving a healthcare company. They got some new technology, they made some new partnership, or they just got something in or out of trial, right? And usually there's throughout their trials, right? And there's might be in phase one, phase two, phase three, or phase four of the trial. And if they, as they move throughout those trials, that usually drives the price of the stock up in a healthcare stock. So for your healthcare stocks, you looking for stuff like, hey, I just created a new um, medicine and I've made it through phase one of trials. And now we in clinicals, right? That means that we testing on live patients, right? And if we testing on live patients,
It's a possibility it can go to market.
that it goes to market. And once it's approved by, you know, who is this? Once it's approved by
The FDA.
FDA, yeah, yep. Thank you. Once it's approved by FDA, and you know, you get that big spike of volume after that. Because now you've gone through proving that you are good and that you can make, you know, go to company.
But check this out. What if it's approved for use in another country? Like, no, no.
That doesn't necessarily affect how it does in the US.
Okay, all right.
It does help the company itself, but not so much the actual it may not, it may or may not drive the price of the stock.
Okay, all right.
It could, because it still has to go through clinical testing in those countries too. So just because it gets approved in like Singapore or, you know, or some small country in Asia doesn't mean that it's doing the same thing in UK or the United States. So it getting approved in the UK may drive the price, but it getting approved in Myanmar may not do anything for the price.
Okay, all right, cool.
But versus, you know, you just gotta look at how, you know, how it looks. But yeah, this would have been a good penny stock to look at. If we had caught this before the earnings release, which, yeah, what can you say? You know, you don't know which one of these. Some of these things can dump, or some of these things can or cannot move. You know, that's kind of why I didn't like trading penny stocks, because you just never know. I need something I can like. I need something I can get more information on, right?
Yeah.
But it's never a bad move to get in some of these just to see what happened. You know, if you got some extra money that you want to just see what happened with, and you've done enough research on it, and maybe you know, you've seen enough for you to pull up a trade, I say take it, but just know you need to just go ahead and say that money is gone.
Okay.
That way you ain't like banking on making this particular move. Just if you get in it, hope for the best, you know, but expect that you're gonna lose that money.
Okay.
That's how you really got to look at that. But yeah, man. I will like I said, I'm gonna be looking for some
So
new.
for is it better to trade those kind of companies like day trading or something like that?
No, I wouldn't even day trade them. I mean,
Okay.
but again, you don't know why it's moving. You don't know, you know, you don't really know what's gonna cause the move, or what's gonna cause it to buy up, or what's gonna cause it to drop. So unless you really like want to dig into that particular company, that means you need to be trying to figure out like who's invested into it. And you can see that kind of stuff too. Let me show you that company Leap. Here's a good one. Go to Yahoo Finance. And it's a real quick, easy way to find that out, right? So Yahoo Finance is a good tool to use, right? And this is that same company. And you can see how I searched it, right?
You
I
put
just
dollar
typed
sign in
in,
the front.
yep, just typed in a dollar sign, Yahoo Finance dollar sign. That takes me directly to this company, right? And now I can see here's the when like this is when you can do a deep research, right? So one thing you want to know is again like what's the company's last 52 weeks, how they've been doing over the last year, and all that kind of stuff. It's still loading on the chart. So I don't know how it's necessarily gonna take. But one of the things I like to see is right, I like to see what the historical data is, the financials, right? And the thing I'm looking for the financials is let me see if it's gonna pull up. Yep. So I want to know net interest, meaning who and how many people are interested in, has that increase or decrease? Like who is now interested in buying this stock, right? How has that changed, right? And you can see over the past couple years, we've gone this 2023, 2021, 2022, 2023, has the net income or net interest increased? I want to see that. Then I want to see like what is the cash flow or total revenue, right? Total revenue, they not reporting none, right? Operating expenses, I can see they're in debt right now, right? So this really is a company that's in debt. So a company in debt means that they're not making no money. It'll take them a longer time to make a profit, right? Then I want to see what's the options on it, right? I want to see what the open interest is, right? If it'll tell me, right? So open interest, that means, I mean, again, how many people are interested at it at a certain price. This tells you all of the pending orders at a certain price. So right now, around a dollar, it's a lot of people sitting at $1, right? There's a lot more people that's trying to sell this. You see, a lot more people. Well, I take that back. It's a lot more people trying to buy at $1 than it is that's trying to sell it. So the sellers their sellers are upside down right now. So a lot of people were or trying to sell this, but you can see the open interest is mostly on the long side. That's a good sign that we going up. Then I want to see who is holding this company, meaning who is buying this company. Anybody that's a big name, if I start seeing big names buying this company, then I want to be in there too, right? So 11.9% of the shares are held by insiders. 28.72% are shared by the institutions. That means some big bank buyers are holding this, right? The float shared by institution, right? Number of institutions holding is 41. So this means that they actually have some people of importance that are holding this stock. So when I see something like that, it's telling me, all right, cool. May need to pay attention to this because I need to see who those institutions are. Then now I can see some of the institutions that are holding it here. And if I see somebody like a Vanguard, we know that's a big company that's holding this. They own 2% of the shares. They have 116 million shares. Then the other name that I want to see is these mother suckers right here. BlackRock. BlackRock, big company. We know we want to see these people. When you see Vanguard and BlackRock, these people like that, Gilead Science is another one. They own almost 10%. So they are heavily, BlackRock position ain't that big. And they've been in that position since June. So
They
their
probably
position,
just part of the financial part of the
probably
stock.
so. Probably
Okay.
so. But Vanguard is in there for 1 million. They own 2%. They got they got 2 million. They valued at 2 million on theirs. They got a 1.6 million in share. So they got some people that are interested in this, right? Mutual fund holders. They got Vanguard, Fidelity. They got Fidelity involved, right? So it's some people who are heavily invested into what happens with this. So you have to think that they're gonna want to get their money back. They've been in since um, June 30th of this year. They bought at the lows when it was probably making its lows. Where is that company at? Here. So it's here. We're at Leaps. Therapeutics. They bought June 30th, right? June 30th. So they bought here. These they bought down here, right? These folk already up at the peak of the move yesterday, up 870.5% at the peak of the move yesterday. They were already up. So, geez, let me try to do the math right quick. Right. So let's say they bought at 26 cents. They bought at 26 cents, right? Per share. The amount that BlackRock bought or Vanguard bought was 1.6 million, right? So their initial investment, 1.6 million, was initial investment was roughly $416,000. Not that big. They just moved up to at a peak of from July 30th, June 30th, at a peak, they were up to $2.54 per share. Those same shares that they got $4 million. So they that initial investment now is worth 4.06 mil, where they invested 400,000 at the peak of that move. And that's just to kind of show you, like, if they looking at a $4 million gain, well, a $3 million gain off of this, and they're gonna want to see that either they're gonna take it out, close out profit, or they're expecting it to take out these $3 highs, $3.58 highs. Or they're happy they done made their money back and they gonna start selling off. But you gotta assume that once you see these institutional holders inside of this trade, that they're gonna start expecting their money back. BlackRock got a share in it. They don't have a large share. They don't have a large size in it. But these people with 5 million, 1 and above, they're gonna want to get their money back. Because these people bought in September. These people bought in June. So yeah, that's how they're gonna play it. Yep. But anyway, I'm gonna post the video. My mouth dry. My mouth dry. And I gotta drive an hour tomorrow, maybe. So hour and a half tomorrow.
Okay.
Actually 3 hours tomorrow. So I'm gonna call it. I'm gonna post the video. Like I said, what I'll do is I'm gonna get the transcript of this, and I'm gonna just check and see how the transcript look. And when I post this videos and stuff onto Facebook in the group, then I will try to see if I can get all of the details and everything from each trade and add it to the post.
Okay. Sounds good.
Okay.
All right, man. This has been a good session, man. Appreciate it.
Oh, no problem. No problem. You know what we got to do.
Exactly. All right.
If y'all trade tomorrow, just be patient. Just wait for what you see. Just wait. Don't
rush. Don't force nothing.
Don't jump in the first move, because the first move might be a fake out. So
all right, cool.
Be patient. Check the higher time frame before you get in off a lower time frame. All right, y'all.
All right. Catch you later.
All right, sir. Thank y'all.
Sorry,
Thank you.
everybody.
Dang, you
All right.
Everybody
Y'all
be
have a
safe
good
out
one.
here. All right, Cuzzo.
all right, man.
Yep. Oh,
Hold on.
when you want to get with? Okay.
Wait. Let me start the recording.
Okay, cool.